Hi there traders, welcome to our next lesson. This lesson is all about Fibonacci retracement. We use Fibonacci retracement to measure potential areas of a pullback in a trending market where we may find a price point that we want to enter a trade or potentially set a stop loss. So there's three main areas or three main points I use on the Fibonacci retracement. That is 0.38, 0.5 and 0.618. There's many other levels. I find those three are the main levels. Those areas get rejected and supported over and over again. So let's just dive right into it. We'll just measure a pullback on a bearish run. So when we want to measure the pullback, we run top to bottom. We want to measure the entire run to see our potential pullback. So as you can see here, we pulled back to the 0.5 Fibonacci level, perfect rejection and price closure on those candles, but we also did wick and reject the 0.618. Really nice Fibonacci rejection zones, and it will come as no surprise either. Quite often Fibonacci levels line up with horizontal support and resistance structures and also an EMA. So if you've got a few confluence and resistance zones in and around Fibonacci level, candlestick formation, horizontal levels, this here can be a very, very high probability entry point for a trade. So as you can see, once that rejection completed, down we went for our next run. All right, let's do it again. This time we'll measure a bullish run. So we want to measure the bullish pullback. So this time we're going to start from the bottom, very bottom of the run to the very top, like so, wick to wick. And we've got a really nice 0.618 support structure here. We did just close below it a little bit, but this particular zone was well supported. Another really nice Fibonacci rejection. All right, one more. We'll do another bearish pullback. Top of the run, bottom of the run, and look at that. Absolutely perfect 0.5 Fibonacci rejection level. So 0.38, 0.5 and 0.618 are the three main key levels that I look for a pullback and possible entry points. 0.78 I've also got up on my measuring tool as well, but I only use that really for stop loss placement. So if I'm going to enter a short around this region, I'd possibly have a stop loss about here. 0.38 is a pretty shallow pullback. 0.5 is pretty much perfect really, but often we get a 0.618 pullback. If the deeper the pullback, the more risk reward we can generally get if the run continues in our favor. Alright, so that's pretty much it guys as far as Fibonacci retracement goes. I'll just bring up the settings here so you can see some other levels that you can utilize. I just use 0 and 1 just so I can see where I measure the top and bottom of the run. But those are my three main levels there. You can have a look at the 0.23 fib as well. A lot of people will use that. I don't. I think that's just a minor level. But do your own back testing. Find what levels you like, and you can run with them from there. Alright, that's about it. I'll quickly dive down to a lower time frame chart and I'll show you how I use the Fibonacci to enter a trade based on the 1 hour time frame. Okay, so let's just run through a potential trade setup here, guys. So far you've learnt about horizontal support and resistance, you've learnt about EMAs, learnt about MACD, and now you've learnt about Fibonacci retracement. So let's combine all of those for a potential trade entry. Alright, so what we're looking for here, we've got a really nice double top rejecting resistance, and we've also got some MACD divergence over here. Not much, just a little bit. So double top there and a lower high on the peaks here. So we're possibly looking at a trend reversal or at least rejecting and having more downside from this resistance level. So we've established that. We've got an EMA here. It's chopped through quite a bit, so it hasn't been clean support and resistance as you can see. But now once this trend has changed, it really has been rejected really nicely up until it crosses back over here. So what we're looking for is an entry based on this rejection. Let's try and find an entry point after we reject resistance. Alright, so I've measured top to bottom of the run. We want to enter around the 0.38, 0.5 or 0.618 Fibonacci level. So that's what we've done. We pulled back pretty sharply and rejected the 0.618 Fibonacci level. So soon we'll go through price action as well, what candles mean and how to enter. This candle here is a really nice rejection. So once this candle closes, this is where we'd possibly look for an entry. Wait for it to close back below the EMA. So this could be a possible entry point here, and our stop loss we can have just above the 0.78 Fibonacci, or if we want to be a little bit safer, we can have it above the resistance level there just in case it came back to retest. So from there, we just want to follow the trend as long as we can. So once our trade started running in our favour, we can see the 50 EMA respected there perfectly. So this could be a really nice level to trail our stop loss until we get taken out, probably around about here even. If you're a little bit softer on your stop, that's a really nice rejection candle there. Doji deceleration. So if we had a stop loss here, we would have got taken out once we broke back above the EMA. So that's quite a nice trade. So there it is, guys. There's an entry, there's a stop loss strategy, and an entry point based on Fibonacci's, combining it with a few other factors such as price action, support and resistance, and an EMA. So from here, guys, I'll start showing examples, piecing together all our tools that we use to identify high probability trades that we can enter and try and make a profit off. That's it for Fibonacci retracement, guys. Hope you got a lot out of it. The next one coming up will be Fibonacci extensions to identify possible profit targets.